starting with, amidst your applause, Ms. Radhika Agashe, Executive Director, Access, Mr. Vipin Sharma, CEO, Access, Mr. Ramesh Arunachalam. May I also welcome and invite Mr. Ravi Arora, Senior Vice President, Global Public Policy and Government Affairs, MasterCard, Mr. Alikesh Wadhwani, Director, Poverty Alleviation, Bill and Melinda Gates Foundation, Mr. V. Vaidyanathan, Managing Director and CEO, IDFC First Bank, Mr. S. Raman, Chairman and Managing Director, Small Industries Development Bank of India. And let's welcome with a rousing applause the inaugural session's chief guest, Dr. Vivek Joshi, Secretary, Department of Financial Services, Ministry of Finance, Government of India. May I request you, sir, to please join us on stage. Let's welcome with a huge round of applause, please. We warmly welcome the honorable dignitaries who have joined us on the dais. A very good morning and a very warm welcome to all of you. I now request Mr. Satyan Kumar from Access team to please welcome our eminent panelists with flowers. It is our privilege to welcome the eminent panelists who are seated with us on the dais. But first, let's give a warm welcome and applause to the Honorable Chief Guest, Dr. Vivek Joshi, Secretary, Department of Financial Services, Ministry of Finance, Government of India. We warmly welcome in our midst Mr. Ravi Arora, Senior Vice President, Global Public Policy and Government Affairs, MasterCard. A warm welcome to Mr. Alikesh Wadhwani, Director, Poverty Alleviation, Bill and Melinda Gates Foundation. A very warm and hearty welcome to Mr. V. Vaidyanathan, Managing Director and CEO, IDFC First Bank. A warm and hearty welcome to Mr. S. Raman, Chairman and Managing Director, Small Industries Development Bank of India. And we welcome, of course, the other dignitaries who have joined us on the panel. So once again, extending a very warm welcome to you all. Ladies and gentlemen, may I request you all to please kindly rise and stand in attention for the national anthem. May I request the audio team to please play the national anthem.
Is it not working? We can sing.
Yes, we can. जन गण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंग विंध्य हिमाचल यमुना गंगा उच्छल जलधि तरंग तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जनगण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे Jaya, 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 Hey. Thank you, ladies and gentlemen. After that salutation to Mother Nation, it is time now to invite Ms. Radhika Agashe, Executive Director, Access, to kindly present the formal summit welcome. Please welcome with a hearty applause.
Respected guests on the dais, Dr. Vivek Joshi, Secretary, Department of Financial Services, Government of India, Mr. S. Raman, Chairman, SIDBI, Mr. Alkesh Wadhwani, Mr. Arora, Mr. Vaidyanathan, my colleagues Vipin Sharma, Ramesh Arunachalam, dear delegates and resource persons, a very good morning. It's my privilege to welcome you all on behalf of Access Development Services to the 20th milestone edition of the Inclusive Finance Summit. I warmly welcome all the eminent dignitaries on the dais. A special welcome and thanks to our inaugural chief guest, Dr. Joshi. Thank you so much for being with us today, sir. It fills me with great pride that this is the 20th summit that Access is organizing. Since the first summit was organized in 2004, the financial inclusion landscape has transformed dramatically, not only in India, but at the global level. The summits organized by Access have been, to some extent, been able to track this evolution and in some manner also informed and influenced the trends. This seems to be an year of milestones. This year is the 50th anniversary of Seva Bank, possibly India's first inclusive finance institution. Late Ilaben Bhatt's vision lives through this women's-owned and run bank, a model which has inspired several women's self-employment and financial inclusion initiatives across the country. The world's largest program for promoting women's economic empowerment and financial inclusion, the self-help group movement in India, has completed 30 years. With 13.4 million self-help groups covering 160 million households across the country, both NABARD and National Rural Livelihoods Mission needs to be commended for this spectacular achievement. With Sadhan celebrating 25 years, this marks also a milestone for the microfinance channel of delivery for financial inclusion. And this is the 10th year going of the ambitious Pradhan Mantri Jan Dhan Yojana, PMJDY, 510 million bank accounts opened as of November 23, with over 2,100 billion in deposits. This is a resounding success. The G20 Global Partnership for Financial Inclusion applauded India for, and I quote, achieving over 80% bank account penetration by leveraging digital payment infrastructures, a journey that would otherwise have taken 47 years through traditional means. Digital payments via the UPI crossed 11 billion mark for a second consecutive month in November. It is quite evident that India's financial inclusion story, riding on the success of Jan Dhan Yojana and the DPI, is a shining example for the world to learn from. As we celebrate the extraordinary achievements of the PMJDY, it's most appropriate that the summit this year is being co-hosted with the Department of Financial Services, Ministry of Finance, Government of India. This association bolsters the credibility of this platform and provides an opportunity for the summit, for us to share the deliberations from the summit discussions with the government. At this 20th year, the next level vision that Access has for the summit is to evolve it into a global event, a global platform, and appropriately from this year onwards, we are rechristening and repositioning it as the global initiative, Global Inclusive Finance Summit. We think it's a good time to set it up as a platform for global cross-pollination and learning. Now is the time for financial institutions to optimize and leverage on the foundational work already done across the country to design and deliver relevant financial products and services at scale and move the needle from inclusion to financial health and financial well-being of customers. The summit this year will delve deeper into moving forward on this agenda with the overarching theme, Future of Finance, Inclusive and Equitable Growth for All. And 125 thought leaders and experts will share their perspectives across 24 sessions, featuring panel discussions, research presentations, fireside chats, etc. A few of our partners are organizing side events, workshops, and roundtables that offer an opportunity for delegates to engage in a small format, deeper participatory conversations. We are expecting over 900 delegates to attend the summit this year. As always, the Inclusive Finance India report will be released at the summit inaugural just now, with the editor, Ramesh Arunachalam, presenting the summary of the report. In partnership with Equifax, Access for the last 4 years has been bringing out a report on the status and trends of micro and small enterprise lending. This will be released on day 2 of the summit. The 15th Inclusive Finance India Awards will be organized in partnership with HSBC in the evening today, where institutions and individuals who have made significant contribution to advancing financial inclusion will be felicitated and celebrated. The summit, as always, attracts the association of a large number of stakeholders as sponsors, technical, knowledge, and track partners. Before concluding, I would like to extend a big thank you to all the sponsors and partners. Without their support, it would have been impossible for Access to keep organizing an event of this scale. Lastly, I once again thank the delegates who always manage to turn up at the summit. It seems in greater numbers each year. Thank you so much for making us do this year after year and encouraging us with your participation. I hope the summit brings new information and insights and helps us with thoughts of advancing the campaign of universalizing financial inclusion, not only in India, but globally. Once again, a very warm welcome. Thank you so much.
Thank you, Ms. Agashe, for this warm welcome address. Ladies and gentlemen, we now move towards release of the much-awaited annual publication, the Inclusive Finance India Report 2023, annually brought out by Access. The Inclusive Finance India State of Sector Report annually captures the landscape of financial inclusion initiatives, their progress, policy directives and issues, and constraints. This year's report is authored by sector experts and senior researchers and academics, namely Mr. N. Srinivasan, Mr. Gaurav Gupta, Mr. C.S. Reddy, Ms. S. Ramalakshmi, Padma Shri Nivedita Aduri, Dr. R. Bhaskaran, Mr. Prabhat Lab, Dr. Indradeep Ghosh, Ms. Meesha Sharma, and edited by Mr. Ramesh Arunachalam. May I now invite on stage representatives of sponsors of the Inclusive Finance India Report to please join us for the release. May I invite Mr. Dheeraj Mutreja, Rabo Foundation, Mr. Vinay M. Tonse, Managing Director, State Bank of India, Mr. Romit Sen, Senior Vice President, Corporate Sustainability, HSBC. I request you all to please join us on stage for the release. We already have senior leadership of the other supporters of the report from SIDBI, MasterCard, IDFC First Bank, and BMGF. They are already here with us on the days. I request the team to kindly hand over the copies of the report to the guests on the days. I request Ms. Radhika Agashe to please present a copy of the report to Dr. Vivek Joshi for the release. May I once again invite Mr. Vinay M. Tonse, Mr. Romit Sen, and Mr. Mutreja to please join us on stage for the release. Ladies and gentlemen, this is the journey of 20 years. I thank Mr. Tonse, Mr. Romit Sen, and Mr. Mutreja for joining us on stage for the release. Ladies and gentlemen, it's time now to hear from the editor, Sri Ramesh Arunachalam, on the state of financial inclusion in India. May I now request him to share with us the highlights from the Inclusive Finance India Report 2023.
Good morning, everyone. I've not had breakfast. If I'm low in tone, please forgive me, right? Good morning. Good morning to all distinguished guests. Good morning to the distinguished delegates. It gives me great pleasure to be here back home after almost 15 years. It's like coming back after 15 years going around. And I'd like to thank Access, Vipin, and Radhika for having pulled this off year after year. It's brilliant effort. Thank you very much. I think it deserves an applause. And I'll just give you I've got 10 minutes. So imagine if I've got to summarize a 180-page report in 10 minutes, what I have to do. It's a tough job, but I'll do my best, all right? So there are 10 chapters authored by 7 people, okay? And I'll quickly go, and I'll try to give you a flavor for reflection of what it was 20 years ago as well, okay? To kick off, let's look at the microfinance sector. It's healthy. The 70 MFIs attracted equity worth 16 billion, right? And they offered stable returns. Their active loans grew by 10%. Unique clients grew by 20%. They diversified into solar loans, affordable housing, SME loans. And I think the author, Mr. Srinivasan, who's a veteran, he cautions them on growth, have growth that matches your administrative capacity to manage that growth. That's very critical. But at the same time, he commends them on excellent resilience that they exhibited after the pandemic. So the microfinance sector is doing well. There's an interesting problem interesting issue that he flags is the graduating customer. What happens to them and how do you deal with them? So do read the chapter, very interesting one. The next is in the banking channel on financial inclusion. And sorry? Yeah. No, I'm talking extempore. So 10 minutes, the slides I won't be able to finish, right? Okay. So if you look at the banking channel, 500 million Pradhan Mantri Jan Dhan Yojana accounts, 500 million plus. It's a phenomenal achievement by any standards, okay? Wherever you are, whatever you say. There are issues, there are challenges. There may be dormant accounts which the author has flagged, but it's great. The other point that the author, Gaurav, makes very nicely is about domestic remittance having come down. From 10%, he calls it beautifully, he calls it remittance tax, 10% to 1 to 2% now, which is almost zero cost because of UPI, right? This 1-2% is coming in because of the cash in and cash out basis, right? So, and he talks of expanding branch network, the business correspondents, all pushing the last mile, and points out to areas which need attention, like closing the gender. Again, the Pradhan Mantri Jan Dhan Yojana closed the gender gap in terms of account ownership, and that's a commendable achievement, right? But then he talks of social and gender gaps in specific areas like for urban poor, for migrants, and a few other cases. So I think also he calls for a little more transparency and more clarity on data linking up with the Pradhan Mantri Jan Dhan Yojana accounts with the insurance programs. So that's the banking channel. Moving on to the SHG channel. The first SHG I saw, I'll tell you, maybe you all saw it earlier or later. I saw it, I don't know if my friend Al Fernandez is here from Myrada. Hi Al, morning. I saw the first SHG in mid-90s in Myrada, right? And this was part of an IFAD supervision mission. From that single SHG to where we are today is phenomenal. 13.4 million SHGs is brilliant. So they have savings deposits worth 588 billion, 85% of all women SHGs, and 6.9 are loan linked. And very interestingly, the authors, C.S. Reddy, Ramalakshmi, and his Nivedita, make a very interesting point. You know, compare the level of deposits to the loans, and it gives you some sense of what's going on. So read that chapter. Dormancy of accounts is again flagged as an issue, but it's great work done. See, and the fourth is a new chapter. It's on cooperatives. 100,000 packs are there, 1,700 billion worth deposits, and 130 million farmers. This shows you India's approach. Plural, diversified. This, if the great Harvard historian whom I studied under, Alfred Chandler, were here, he will tell you that this is what is called as contingency approach. For different contexts, you have different models. And that's so good about the India story. If you're looking at the 20th year, this is the most brilliant aspect. You have SHGs growing, you have MFIs growing, you have the banking channel growing, and you have the cooperatives. This deserves a great applause. Okay. Moving on, the SME finance has done well. The Reserve Bank data indicates that both public and private sector banks have been stable. They follow different strategies, and there is no one good way to do anything. You can do it in multiple ways. See, the private sector banks have, the loan outstanding has increased. They're probably concentrating on small and middle. The public sector banks, their loan accounts have increased. They're looking at more of the micro. Then you have the small finance banks and the NBFCs, which have done very well. And if you look at the Pradhan Mantri Mudra Yojana and the work of SIDBI, it's been outstanding, right? So PMMY's targets have been far exceeded by all categories of institutions. And SIDBI has been the backbone of this sector. SIDBI has not just been providing credit, it's provided much more than credit. I know, I've worked with SIDBI for almost 25 years, and I'm saying this, phenomenal work. The banks, so the development banks, SIDBI, all of them have done well. So, and there are, the one issue I want to flag, because I wrote that chapter on SME finance, the RBI acknowledges that there are issues with data. So, but when you're dealing with this scale, I don't think anybody in any country in the world deals with this scale, 500 million, 600 million. There are going to be data issues, but that's going to be solved by another chapter coming in by a solution that the Reserve Bank has done. Moving on, the sixth chapter, which is of course my favorite also, is because I'm a digital guy, all digital, no cash, I don't have any cash on me, right? Is the story of UPI, phenomenal. It's India's game changer, right? It's brilliant. If you look at it, 11.4 billion transactions in October, and value over 17 trillion. Why is it so good? Let's forget the numbers. Step back and ask this question. It's simple. It's easy to operate. You get on-time authentication, right? Fraud is controlled using AI. I know that because I work in the field of AI. And it's most importantly, now UPI has moved to voice-led. I said this in 2016, go voice-led. Voice-led is very crucial. Most people don't understand the implications of voice-led payment systems. It gives the low-income person the process and digital literacy on the go. They can't key in numbers. They find it difficult. So if I can speak, it makes a big difference. So this is going to be a game changer. The chapter also highlights direct benefit transfers, but rightly flags one issue, which for lack of time, it flags many other issues, but I'll flag one issue, cyber security. Please remember, we are going all digital. Let's be careful. DDoS, ransomware, zero-day attacks, those of you who want to know more can talk to me later. But these are all reality, right? We need to be prepared. When we are going towards 100% digital, let's make sure we are fully protected. We are aware and protected. That's absolutely necessary. I worked with global clients who've suffered from zero-day attacks. You don't even know till the hacker is in and he's exploiting your system. That's why it's called zero-day, right? So moving on, again, another topic which is of great interest to me is AI and financial inclusion. I work a lot in that area, and I've written the chapter. AI is transforming financial inclusion. It's being used in warehouse receipt financing in India. We've got cases there. It's being used in alternative credit scoring. What do you do? See, when you normally look at repayment, you look at only one thing. But when you look at the entire digital footprint, you're looking at data coming in from what payments they made, what utility payments they made. It gives you a different sense of how they are managing their cash flow. It's very, very critical. So that's useful. It's used in fraud management, both by UPI and others. And it's also used in agriculture finance. It's revolutionizing agriculture finance. Satellite imagery is put into a deep learning model, and it gives you forecasts. These are all brilliant things that are going on. But let's remember one thing. An AI model is as good as the data that goes into it. You train the AI model with poor, biased data, you'll get garbage out. It's garbage in, garbage out. So your data has to be, you have to be sensitive to data quality. You have to be sensitive to representativeness in data, that it doesn't perpetuate biases, right? So that's critical. But the larger message for all institutions here is that please wake up. If you don't have an AI strategy, get one. You may be a commercial bank, you may be a development bank, you may be a small finance bank, you may be an NBFC. You need an AI strategy because AI is coming, and every day in the field of generative AI can mean a source of competitive disadvantage. Okay, moving forward very quickly to a very interesting chapter on gender. I really loved it, and I would urge you to read it. It talks of a very fresh approach to gender intentional approach, and the authors call for reforming product and process design to suit women's roles, and it also calls for panel data disaggregated by gender. It's a brilliant chapter. I loved every bit of it. It's a lot of research, and they've argued it out very well. Moving on, I'm moving on quickly because I realize I may be out of time. Insurance is done very well. Again, multiplicity. Pluralism is the key. You have got government, you have Pradhan Mantri, PMJJBY, Pradhan Mantri Jan Arogya Yojana, you have all the Atal Pension Yojana, then you have the private and public micro insurers, and then you have the mutuals. They are very good, they're equally good. The claims ratio are nothing, claim rejection is nothing more than 3 to 4%. Case study of Vimo Seva is highlighted. There are others like Dan and Shepherd, and I will say, and then you have both in SME finance and in insurance, you have the new kid in town. That's your fintech, your insurtech, pension tech, or MSME tech, right? So these are all filling in the gaps, right? Okay. The most crucial happening here in insurance is that, in my opinion, the Pradhan Mantri Jan Arogya Yojana is one of the best programs I've seen globally in terms of coverage, in terms of impact on health. I don't think there's a program as good as that. It's a phenomenal program. Moving on to the last bit, and this is where the Reserve Bank of India needs to be commended for some phenomenal work in measuring financial inclusion. What happens if we are doing so much work, if we don't have an idea of where we are going? It's like Alice in Wonderland, right? Unless we know where we are going, only then we can decide where we can move forward. So the RBI's Financial Inclusion Index, which looks at access, quality, usage, has been very good. It's a static measure of a dynamic construct. What we have tried to do is to bifurcate it pre- and post-pandemic and give out data. But what the RBI is doing now is that it's realized it's a static measure. It's now brought out Antardrishti. This was launched by the Honorable Governor on the 6th of June, 2023. It's a financial inclusion dashboard, and that gives you real-time micro-granular data. This goes back to the session last year. I saw the session, I think it was moderated by Sumita, where they talked of the need for data, granular data, micro-granular data. That's here. It's right now being used by the Reserve Bank. This will solve all data problems. All regulators have come together, IRDA, PFRDA, SEBI, RBI, pulled together. So I think this is going to give us a benchmark on moving towards 100% sustained financial inclusion in years to come. Thank you very much, ladies and gentlemen. This was wonderful to be here.
Thank you, Mr. Arunachalam, for those highlights. Ladies and gentlemen, we have with us on the dais Mr. V. Vaidyanathan, Managing Director and CEO, IDFC First Bank. May I now invite him to share his thoughts. Please welcome with an applause.
Loading the presentation. Good morning, ladies and gentlemen. Good morning, ladies and gentlemen on the dais. It really is a great pleasure for me to be here at the Global Inclusive Summit meeting this morning. I've been here for a few years, and I can clearly say this is one of the very few summits which really brings out fantastic research reports, which makes great reading, and also, encourages great debate. Now, for today's discussion, I just want to share with you our own experience and case study of what we are doing in inclusive financing, and what is really, what are the few factors that are actually powering this up. So number one, I must say that I've categorized the 5 kinds of inclusive financing happening in the country today. Number one that we are doing is basically what you do in terms of can you give a printout, because I can't see behind here. So in terms of the kind of business financing people do. So the business financing includes, trading, manufacturing, kirana shops, working capital, inventory financing, commercial vehicle, etc. And typical profile, because while you may have heard of it, I want to share the typical profile with you. The typical profile of people, thank you for that. The typical profile of people we are lending to is basically, you can see it on the screen here, entrepreneurs, which are maybe having turnover of anywhere between 10 to 50 crore. These are typically how their offices look. The kind of due diligence you do for these loans are a 10-step process, which I will tell you later. Now, this is a customer who's processing chili, somebody is processing cotton trading, someone is doing maize and paddy, someone is doing electrical items, somebody is doing wholesale trading. You can see somebody trading aluminum sheets, trading medicines. So these are the kind of people that we are financing. And this is one big category where financing traditionally in India has actually not been very much available to this segment thus far. Next is education institutions. Third is what we do is, this is a picture and profile of people whom we are financing in the micro-entrepreneur category. This is one that has been truly underserved in the country thus far. In this, we also given a customer profile there. You can see that these are largely individual borrowers, but largely for income-generating activities. The typical income of this profile is 280,000 to 3 lakh rupees. The average loan period for these people is about 1.5 lakhs. And close to about 25% of them are new to credit. The next is this set of profile of people whom we are financing. Typically, about 8% of them are new to credit. Rest are people who have borrowed. The average income of these people is about 1.5 lakh. The average loan period to these people is about 50,000 rupees. Almost all of them are female borrowers, and they typically do really. Someone wants to buy auto rickshaw, somebody wants to do a welding shop, those kind of small business requirements. Then, again, in rural India, we are financing commercial vehicles. This customer profile typically, have an average loan amount of 3 to 5 lakh rupees, and average LTV is about 85%. Now, the other sector profile which we are financing is tractors. In tractors, typically, again, people have a household income of 4 to 5 lakhs. Average loan amount is about 5 lakh rupees, and typically livelihood, agri, dairy, processing, etc. Now, typically, Kisan credit card is people, again, security of property in this case. And again, household income close to about 8 to 10 lakhs, average loan amount 13 lakhs. You get the color here. Now, similarly, as far as farmer produce organization, you know the story. And again, another category of financing done is typically the kirana shops, traders, this kind of stuff. You see these shops nearby your homes. Typically, they don't get credit in the country. We all know that. And they don't get credit. And I'll tell you later how it is opening up and how we're doing it. I'll tell you some numbers. Just moving ahead in a quick way, that is one category, business financing. In business financing, long and short of it is that you're financing a business, they're doing economic activity, they're earning, they're paying you back. That cycle closes and the loop closes like that. The second category of financing is livelihood. In the livelihood financing, what we are doing is basically financing poultry, village shops, flower shops, tailoring shops, flour mills, carpenters, masonry, cattle loans. Here, you finance a livelihood. They earn from the livelihood, and then they pay back the lender. Third category is skills. Now, in the skill financing, what we do is that we're financing a skill. could be polytechnic institutes, could be beautician, electrician, plumbers, mechanics, yoga, fitness. I'll share some numbers with you a little later. So that is one category I showed you is what we finance in terms of skills. So unlike business financing, here you taught a skill or you financed a skill. The person took maybe some time to translate that skill into an economic activity, and then they pay back. Now, I want to share with you the next category of financing is when we finance, productivity improvement. Oftentimes, we tend to think of consumer durables as consumer durables. But if you see the life of someone who's washing clothes, and all of us who would have been in the lower income profile in the prior generation or in this generation, we realize that washing clothes in a day takes away 1 hour, 1.5 hours for the family, maybe 2. Now, washing machine does it in maybe half an hour or 20 minutes. So it's a massive productivity enhancement. So our bank, for example, has financed close to about 1.9 million washing machines. It then dramatically improves the livelihood, let me say, the time spent on washing clothes in that example. Mobile phones, we all know, the poor did not have access to mobile phones. At least now the mobile phones have become 5,000 to 6,000 rupees, or maybe 10,000 rupees to get a mobile phone. We have financed close to 12 million mobile phones. It is a connectivity tool. Then televisions, 4.5 million. We have financed close to 3 million refrigerators. In one of the interviews I was having with one of those people in that segment, that person told me, once my refrigerator has come, now I can buy in larger lots. I can buy milk in larger lots. It can last a longer time. So these are massive productivity hacks for people, because people in this room typically take all these things, air conditioner, mobile phones, refrigerator, washing machine, we take it for granted. But really in the rural location, it is not so. So we have financed these, and close to about 30 million of these customers we have financed thus far. Now, people who finance inverters, atta maker, the atta maker and laptops. I find laptops is a real issue, because during the, COVID, we found many people trying to read, especially poor children trying to read from the mobile phone, if at all they had a mobile phone. Now, the rich children, well-to-do children reading on the laptop and absorbing it even through COVID. But the, not rich, middle class also. But the poor were accessing through mobile phone. It's impossible for them to learn. So the rich-poor divide of capabilities only expands because of lack of a laptop. So think of laptop also not just as a means to play games or something, but it's also a means for learning for children. So my comment, therefore, is that each of the consumption items, what consumer durable items, are enhancing productivity for the people at large. Now, this is the most important thing I want to share with you, that we started in this bank toilet financing. Now, we started financing people who wanted to do, hand pumps, then the septic tank, then the pipes that come from the septic tank to the home, then the water purifier, then the water itself. We finance the whole chain. And we have provided financing to these people. And I must share with you the typical loan amount size of the toilet that we are financing is about 39,286 rupees. This is the numbers from our bank's books. And we offer the customers zero prepayment fee. We say you can close the loan anytime you want. And you'll be surprised, these people are paying back. I'll show you the previous page. The repayment rate is 99.7%. Just think about it. People are taking loans for toilet and repaying you back 99.7%. Gross NPA is 0.8%. Net NPA is 0.3%. It's a revelation to think that poor people pay back so well for borrowing for a toilet. And this is not, these are the kind of items that take it for. New toilet, renovation of existing toilet, septic tank, toilet for handicapped people, rainwater harvesting, hand pumps, water purifying systems, household water connections. 1,200 crores, and the repayment is like that. I told you that it's running 99.7%. Now, sometimes people tend to think, there is a general theory or philosophy that people think, oh my God, these are poor people, how will they pay you back? They have unseasonal income. Sometimes people tend to think of these people as they are unorganized and all that. But I can tell you, there are some things, and sometimes some people think that, net interest margin is so high, you're lending at 20% or 22%, then how will they pay back? This must be default. No, listen, there is no big deal giving a home loan having low NPA. But in this segment, it is basically a matter of specialization. It is not a matter of how much the net interest margin is. Our bank is running a net interest margin of 6.3%. But our NPA, I'll show you on the slide, is very important for you to note that what I showed you, consumer durable, the washing machine, the refrigerators, and toilets, everything. The consumer loans, you can see gross NPA is 1.96% and net NPA is 0.52%. So it is not, you should not assume that because you're lending to a so-called riskier segment, I mean, this is your delinquency will be high. And by the way, in case you thought, you can see that loan against property, which is a property secured having gross NPA of 2.3 and net NPA of 1. But this segment is giving you a net NPA of 0.52. Now, similarly, SME loans, I showed you the different category of business people financing loans. It is running at 1.42 gross and 0.47 net, which is pretty low for uninitiated. So then you might think that this is maybe a one-time. I'm going to show you why it is not one time. Over a period of 13 years, starting from 2011 to, we're not touching 2023, we started in 2010, the gross NPA always has been just 2% and net NPA has always been 1%. So it is not the flash in the pan that you are running low NPA now. 13 years is a long time to operate in this segment and still have low NPA. I can tell you the black swan people talk about, the blackest of black swan was COVID. I mean, it couldn't get worse. But before that, a black swan event even was a demonetization, cash gone from people's hands. But this segment, look at the repayment in that segment. Even during 2017, gross NPA was only 1.91 and net was 1.19. Even after COVID, it has come down to 1.53 and 0.52. So the point I'm trying to say is that this is a very good segment to lend to. It truly improves living conditions, either through hygiene or through sanitation or through water connection or through refrigeration or through laptops. It just improves people's lives, and this is the way the quality of the portfolio is. Now, if you might think that, okay, that this number looks very low, how is it possible? How can NPA be so low in the segment? Again, I must share with you that in this segment, collection rate is running at 99.5% for a consistently long period of time. So this is very important. And in fact, it used to be 99% 3-4 years ago, it's come to 99.5. So we are feeling even more confident of this segment. Of course, we should be very, very careful, not that we can ever be overconfident, or we should not be, but this segment has really behaved well. Now you might think, as some of you who are in the industry might think that, NPA, this percentage very low, can be managed by writing off loans, right? You know that. We know how the game works. But for that, I want to show you write-off data, right? There has not been a single year in our entire history that we have taken one-time credit write-off at all. Never happened. Its profits have only gone up that way. And the only time, ironically, that we had a problem in credit was when large loans went bad. It is never the small customer. You can see that, 6 bar graphs that went below. That was at the time of merger. After merger, for 6 quarters, we had some losses because of large loans, and there were well-known infrastructure loans and all that. And they were all, ironically, those were the so-called larger corporates. So the point is that the small customer never defaulted on you. Large corporates did. And India all saw the cycle. And in fact, even that cycle is getting fixed now because of IBC and other activities of the government. Now, let's look at the consistency. We started this company in 2010. Our loan book was 94 crores. 94, 700, 3,400 crores, 5,000, 7,000, 10,000, 13,000. It's one way. And now it has touched 1,46,000 crores. And even at 1,46,000 crores, gross NPA is only 1.53 and net is only 0.52. So the reason I'm pointing this out to everybody, including especially the financial services people in the room, that we really believe in the model. I'm demonstrating it to you that this segment really pays you very well, over segments, over cycles, over years, and continuously behaves well. So hence, at least in a live case study, you can get more confidence in lending to the segment. Lastly, why is it behaving so well? Many people ask us, look, how is it possible that this segment behaves so well? I'll tell you why. Why is important? Because all in India, thanks to the many initiatives of the Reserve Bank of India and the many initiatives of the Government of India, cash flow evaluation has become very easy. Because before GST, you could not assess cash flow through the GST. Today, GST has become a massive source of cash flow evaluation. Bank statement, now, for example, earlier, if you had to finance somebody who's a chai person, and you had to somebody has to sit there, count the number of cups of tea they're selling, and multiply that by rupees, 10 rupees, and then estimate the income. You don't need to do that anymore because they're all taking QR codes. Money is coming to the bank account. You just have to see the bank statement, and you have to lend to the person. And you know how many cups, irrespective of how many cups of tea they're selling, you know it's coming to the bank statement. So this massive digitization the country has done has made a big difference to this data about cash flow assessment. And cash flow assessment is so different than income assessment, is so different than physical security. Many times people think of physical security, it's also important, but someone give you plant and machinery. Now, can you try selling me a plant and machinery? On the other hand, if a chai wala is showing cash flow in the statement, bank statement lending to that, that's that much more safer. So, number two is debit instruction to the bank account. Now, this is one series of steps the Government of India has done and RBI has done over the last 10 years, but I won't drain the slide too much, but just to tell you that KYC was first physical, now it is biometric. It's become more safe. Risk scorecards were regression, now it's machine learning. Bureau scorecards are low seasoning, now they're high seasoning. Fraud control was static, now it is live test. Cash flow assessment was physical, now it's PDF form based. Your repayment model is PDC, now it is electronic. Now your collection used to be telecalling and field collection, now it's UPI-based collection. Your monitoring was batch mode, now monitoring is real time. So if for 13 years their paper portfolio behaved well, we are hoping it behave even better because these control systems have come that didn't exist before. So in the interest of time, I'll just tell you why, for 75 years this did not happen and why suddenly it is happening now. I mean, in our case, at least I personally doing this for a long time now, but at least as a nation, we did not make much inroad. Why? Because this is how banking was done for a long period of time. Now, if you think of this is how people were always busy in a branch, how they can do inclusive financing? They are busy closing, the books of the day and, paying cash, receiving cash, and doing non-value-adding transactions. This is really how banking worked. But because of the new ecosystem that now come about, I talked about earlier, it make a big difference. Now, lastly, of course, you can see that triangulating multiple sources of data with the e-com, etc., whatever the gentleman before me, Mr. Ramesh, spoke to me about. I don't need to explain this. These are the kind of new ecosystem that is going to make a change. In the interest of time, I'll move ahead. But a long list of changes that are now coming about in terms of Aadhaar, bureau, location, land records. Nowadays, when our people are going for verification, earlier one person used to go, give us a report, I verified the house. Now, no. You can do that. First, we will geotag where this person has gone. We'll geotag where the customer has gone. We will geotag the fact that you physically indeed visited the place. And then a photo, a video of that comes and sits in the bank's records. You feel that much more safer and better credit underwriting now. So, just since Tamal is there in this conference, I remember Tamal interviewed me in 2018. And in one of the interviews, I told him, what has not happened in 50 years will happen in 5 years. This is in 2018. I'm just telling you, this is now 2023. Really, in these 5 years, India did much more than what it did in 50 years. So I want to just close the presentation, folks, here. Ladies and gentlemen, it's a great pleasure talking to you. And I'm hoping through this, live case study of what we presented about what we are doing in this segment, you will get greater confidence of being a part of this segment. One, it is much safer. It is diversified. It runs into many businesses. It is supported by cash flow. And finally, it is meeting a particular social need, a segment which never got credit. And earlier, the rich-poor divide is only increasing. But if credit reaches the bottom of the pyramid, it doesn't have to increase. It can actually, the graphs can converge. Thank you very much, ladies and gentlemen. Bye.
Thank you, Mr. Vaidyanathan. May I now invite Mr. Alikesh Wadhwani, Director, Poverty Alleviation, Bill and Melinda Gates Foundation, to deliver his special address.
Dr. Joshi, members on the dais, distinguished friends, guests, it's lovely to be here and to speak at this summit. First, let me start by congratulating Access and DFS for hosting this, and a special congratulations to Access for this 20-year, doing this for 20 years and doing it consistently with such high quality. It's difficult to speak after Ramesh and Mr. Vaidyanathan. The way they captured the way financial inclusion is growing in India and how it's easy to lend, not, I shouldn't say easy, how it's possible to lend to the poor at low NPAs is actually an amazing story, and it shows the potential of India. Maybe I'll just start with the kind of work we do in a couple of sentences and then move on to financial inclusion. So a lot of the people we work with in India are in the poorer states, UP, Bihar, Orissa. The typical amount of money, we work with farmers, we work with SHG women as two categories. The typical farmer would have, if it's Bihar, not even 1 acre of land. If it's Orissa and UP, slightly more, maybe 1 or 2 acres of land. They would typically earn about 5,000 rupees a month from agriculture. But now things have moved on, so you earn roughly another 5,000 from non-agriculture, maybe a small kirana shop or anything like that, which totally adds up to about, say, 10,000 a month or 1.2 lakhs a year for a family, which is in line with what Mr. Vaidyanathan spoke. If you saw his micro segments, he had written many of the numbers as 1.5 lakhs. And this tallies with the kind of people we work with. Similarly, we work with SHG women. They would also earn roughly same numbers. And the question for me in financial inclusion is, can we serve this segment, and to what extent can we serve this segment, which is earning, give or take, 10,000 a month, of which half is from agriculture and half is from non-agriculture. If you look at all the numbers quoted today, both by Ramesh and later on by Mr. Vaidyanathan, there has clearly been amazing progress in the last decade or so. And what I'd like to highlight is that while the progress has been amazing, we have a long way to go yet. And I'll do it in multiple ways, taking the numbers that Ramesh spoke about. So if we start with UPI, UPI has maybe 350 million customers, as Ramesh said, more than 10 billion transactions a month. It's an amazing success story, and it's continuing to grow at this rate. So the question is, the farmers we care about, or the SHG women we care about, they may not be in this 330 million. The 330 million we are talking about out of a population of 1.4 billion, but even if we take adults, it will be slightly less than a billion, say maybe 900 million. They still don't form this segment. So the question is, how do we get these segments to grow? One is that given the rate UPI is going anyway, maybe from 300 million, it will go very quickly to 900 million, but may take long. So how do we make that process faster? And again, as Ramesh said, it's really how do we get voice used and how do we get feature phone used? NPCI has done a great job. It now has 2 products, Hello UPI and UPI 123, which is for the segment which has feature phones. And I think it's those kind of initiatives that will help inclusive finance really take off. Because, again, the people we care about, the people we deal with, often don't have smartphones and need to get UPI used on feature phones. So still a long way to go on feature phones, but that really is the frontier for inclusive finance. It may not lead to large numbers, but that's really what's critical for inclusive finance. We next talked again, Dr. Vaidyanathan showed how the branches have changed. Now again, branches, as we know, can't serve all of India. There may be about 50,000 branches, 600,000 villages, so maybe 1 in 10 has a branch. But the beauty and the amazing story is now we have more than 1.7 million BCs. And this really is the channel. So again, we have the infrastructure in place, not only through BCs, but if you take the acceptance infrastructure, again, the industry has done an amazing job. Maybe, my colleague was telling me that the industry estimates are that 70 million merchants have acceptance infrastructure, which in today's day means QR codes. And if you take the number of QR codes, it's like 280, 290 million, which includes say, street vendors and others which may not formally classify as vendors. But again, the acceptance infrastructure is there, the BC network is there. Even if you look at transactions and we take AEPS, it's growing tremendously, and now there are about 400 AEPS transactions a month. But again, if you look dive in, we find that when we deal with and work with the BCs, many of them really are not doing enough transactions to be able to make a livelihood properly. And it's here that we really need to work harder to say, what does it take to increase the number of transactions? Why is it failing? If it is, why aren't people using it more? So again, if you take 400 AEPS transactions a month and you take some 1.7 million BC agents, that comes to a few hundred transactions a month, which is, maybe if you divide by 30, 20, 30 a day, which may not be enough to make the BC agents viable, at least in many of the rural parts. This 30 may be an average, but there are many BC agents we work with who are getting single-digit transactions a day. So the infrastructure, I think, is there. Everyone accepts that PMJDY accounts, more than enough opened, all 500 of them, perhaps less of them now are facing issues about having zero balance. The balance is also, I think, roughly 4,000 rupees per PMJDY account, and it's growing a lot. The question, again, is how do we take this infrastructure and make it work to a level that serves all our population? We still find when we work with SHG women who start enterprises, yes, they can get SHG loans. A typical SHG loan is 30,000. But despite them being very credit-worthy, as we see, as the IDFC experience shows, when we work on the ground, we find that it's really, really difficult for women to get loans for enterprises which go beyond the SHG loan. So can she get it on her own name? Can she get 1 lakh or 2 lakhs instead of 30,000 and 50,000? Again, very tough. So I think this is where the big challenge is, and we have to see how to sort it. It happens for specific banks or for specific segments, but the challenge is how to scale it up. So again, the numbers show, for example, that 90% of women who are entrepreneurs, who have some sort of business, don't get any loans from the formal sector. Only 10% get. And if you at a macro level, these are some of the challenges we face. So I think that if we look at it, one can say that, the speed at which we've seen over the last decade, the change that's happening, the same change, if it happens, we will get down to the bottom of the pyramid at much higher levels than we can. And I have no doubt as a country we will. The question is, does it have to take a decade? Can we do it slightly faster? What are the challenges we face? I think these are some of the issues that will be nice to debate in the next couple of days. I'll just end with talking about another thing that Ramesh spoke about, which is cybersecurity. So again, we know anecdotally that there is a lot of challenge in terms of fraud. If you look at I was reading in the newspapers that the kind of work DFS has done is pretty impressive. There was a newspaper article that 7 million phone connections were closed because these were suspected to be fraudsters. 7 million is a lot. So you can imagine the number of attempts at trying to defraud people. All of us would have received calls to try and get your PAN, your PIN, etc. I have got multiple of these. And the question is that as more and more becomes digital, how do we move forward? Again, just to share with you today, the Findex report shows this is the 22 Findex reports, that 35% of Indians in 21 did a digital transaction. Now, despite all the growth we've seen, the number is 35 and not, as China is 86. Now, this was 21. We are now in 23, so I'm sure the numbers are much higher than 35. And this 35 represents the top 35%, I suspect, of India. As we go down the bottom of the pyramid, more and more people will get access. Unfortunately, these people will tend to be non-literate and be more likely to go through cyber fraud. So I think this is the last thing and the important thing we have to solve as India becomes more and more inclusive in its financial system. Thank you so much.
Thank you, Mr. Wadhwani. May I now invite Mr. Ravi Arora, Senior Vice President, Global Public Policy and Government Affairs, MasterCard, to share his perspective. Please welcome with a round of applause.
Thank you very much. Respected members on the dais, Dr. Joshi, Radhika, Vipin, thank you so much for having me here, and good morning, and namaste to everybody. It's really a pleasure and a privilege to be here. 20th anniversary of this summit, and MasterCard, we've been partners with Access for over a decade now, and it's been a very exciting and a phenomenal partnership, in driving the whole inclusive growth agenda, for the country. So, because events such as this, and the Inclusive Finance Report, thank you for highlighting the, all of the tremendous metrics, what India has achieved, and a very, very powerful report. So, thank you for that. And I think this is where we can all come together, share diverse perspectives, as to how to continue to unlock the potential and power of, our citizens of our country. Now, if you look at India's growth story, a lot was shared, by Mr. Vaidyanathan, Alkesh, and, the report. It's been tremendous, right? Over the last decade, the whole digital transformation that India has driven, whether it comes to e-payment, digital literacy, financial inclusion, rural development, is unprecedented. Because India started, with the whole ethos, that the design of everything we do, has to have inclusivity at the core. That's how, programs, can be scaled. So the nation's trajectory, on the whole growth trajectory when it comes to the financial inclusion agenda is spectacular and has been noted around the world. What began with Aadhaar, with the digital identity way back in 2009, followed by, and it's been talked about earlier, UPI, the JAM Trinity, Jan Dhan, Aadhaar, Mobile, CoWIN during COVID, all of these have laid the foundation, of the new digital public infrastructure, right? Because there's been a lot of talk about the digital public infrastructure, which is driving inclusion at scale. And the numbers, as shared with some of my colleagues earlier, 80% financial inclusion in just 6 years, 1.3 billion identities that have been digitized. The Pradhan Mantri Jan Dhan Yojana scheme with over 500 million bank accounts, are amazing milestone. And the government of India is thinking about the whole arc, of financial inclusion. That is how to boost financial health, resilience through access to credit, insurance, micro-pensions, and other sophisticated financial services. This is where we all, come together, because India has shown the world how financial inclusion and digital adoption can go hand in hand. That is a testament what we saw coming out during the, even during the G20 that India hosted the presidency this year. Because, the technology has to be relevant, it has to be inclusive, it has to work, the technology has to work wherever and however people want and need it. Because if it is not inclusive, it's not going to scale. And if it's not going to scale, it really doesn't matter, right? So I think 2023 was a remarkable year, from India's financial inclusion in terms of a benchmark, right? I had the opportunity this year to visit India several times as part of the G20, B20 process, because our CEO was also one of the co-chairs of the working group on financial inclusion for economic empowerment. And I cannot stress enough how much the quality of the dialogue that took place, and noting how impactful these engagements were. Because there is a whole new global conversation that is going on digital transformation and financial inclusion in developing economies, right? With India is at the forefront of this particular movement. We saw also GPFI, the Global Partnership for Financial Inclusion, coming up with the results that it produced coming out of the G20, the principles for safe deployment of digital public infrastructure, the commitment to support digital transformation financing. All of these are outcomes coming out of this year's presidency of India's G20 and the engagement that the private sector had through the B20 process. Amazing journey, but still yet milestones I think we need to achieve, and there are challenges that we need to continue to overcome. So first and foremost, I would say is about we have to continue to advance the basic financial inclusion, because still nearly 10 to 11% of our adult population in the country remains unbanked, right? So there's a need to continue to achieve this universal digital financial inclusion through access, through usage, through the quality of financial services. And very importantly, secondly, we have to digitize small businesses and help them move up the ladder of financial services. Every country around the world, India not excluded by any means, MSMEs, both formal and informal, make up over 90% of companies worldwide and 70% of employment and generating up to 50% of global GDP. So MSMEs are a big constituent that needs to be taken into account. They need access to credit. They need to scale their businesses. So solving for this credit gap have the potential to transform economic growth. And I think that the government of India, through the initiatives like your ONDC, OSEN, the Open Credit Enable Network, the Account Aggregator Framework, all of these are unlocking this opportunity. And thirdly, we have to think about the digital connectivity, the digital divide, kind of bridging that, digital literacy, and digital trust. These are all topics that my colleagues earlier touched upon. And because digital connectivity is important for businesses and communities to thrive, but all of the technology will not yield the results if people don't know how to use it. So this can only be solved through literacy efforts, and how, in very, very simple terms, as to how to use the digital tools. So it then comes down to trust, because people have to trust. They need to trust in the technology, in transactions. Alkesh just talked about cybersecurity. That's very important because that erodes trust. So, and we have now new technologies such as 5G, AI, cloud, all of them promising to boost productivity and quality of life. But for all of this to make a difference and deliver impact to people's life and drive inclusive growth, it has to be on the foundation of good governance, robust cybersecurity, and strong consumer protection. So that is very important. So now I talked about the what and the why, and now it comes to the how. How do we continue to drive progress forward? It is all about public-private partnerships as a catalyst, right? Because that public-private partnership is essential to accelerate growth and financial inclusion, to close the gender divide, close the digital divide, collaborate about investment tools, share best practices around regulatory landscape, and ensure the trust in technology. So at MasterCard, we've been working in India for over 40 years, working with a host of partners around the country, with financial institutions, with merchants, with the government, with fintechs, with merchants, the whole ecosystem in ensuring that we continue to drive innovation, continue to partner, and drive innovation at scale to offer trusted solutions. So, some of the fundamental, I think about 3 S's when I look at some of the areas that MasterCard we are focused on. It is about suraksha, safety. It's about suvidha, convenience. And it is about samriddhi, which is prosperity. So when I talk about suraksha, MasterCard, we process over 1.2 billion transactions per day over our network in 210 countries at 150 different currencies around the world. 1.2 billion transactions a day. Now, cyber hackers and attackers are all there day in and day out, 24/7, looking for an opportunity to penetrate and fraud. So our systems using artificial intelligence, because we are as much a payments technology company, in the payments business, but we are as much of a technology and security company and a cybersecurity company, because our AI solutions and safety net and many of the safety solutions we offer, have just in this year, in the last 12 months alone, mitigated about $30 billion worth of fraud risk, right? So when I talk about convenience, we are a certified Aadhaar, authentication service agency. So we work with, governments, with banks, and other Aadhaar authentication user agencies to extend those services to the remotest part, of the country. So that, that is one example of some of the way that we are engaged in the ecosystem. And when we talk about Samriddhi and prosperity, what comes to my mind is solutions like we have FarmPass. Leveraging our FarmPass solution, we are linking small leasehold farmers to farmer-producer organizations, right? And providing the technology platform to help these small leasehold farmers get better and best access to pricing as well as information, whether it is feature phone driven or it is smartphone driven. It provides the farmer with better access to pricing and uses digital transactions and digital history so that we can bring in partners, and look at alternative means of forming the ability to provide microcredit and loans based on digital transaction histories than just traditional means of collateral and such. So these are the ways that you innovate and you bring. We are working likewise with Kirana with Kirana stores with access. Talking about farmers, we have a program called Mandi, right, which is mainstreaming agriculture through network and development initiatives, where we have over 95 of these farmer-producer organizations, because now we are talking about capacity building. Because taking that, and providing a cadre of trainers to provide structured technical assistance, to these farmer-producer organizations to access high-quality assured markets and working capital, that will unlock that next stage of growth. So helping these small farmers, helping them with access to credit, with data, on what, as well as information on what to plant, and other things that can help them. All of this goes hand in hand with the kind of innovation that we are looking, and we are working with a lot of fintech providers as well, and for MSMEs and driving that acceptance growth. So in conclusion, I would just say that, look, every generation has its moment because it believes it faces unprecedented challenges. Ours is no different, right? So, but India is undergoing a huge digital transformation at a pace that is unparalleled anywhere in the world. And I think the good news, based on what the examples that Mr. Vaidyanathan showed of all of the various, programs through their bank, what Alkesh, shared through Gates Foundation, and I'm sure my other distinguished members on the dais will share, that there is this willingness to engage from all of us, public, private, social sector, working with the government. Each of us, we bring our assets and our perspectives to the table to find new and innovative ways to kind of work together towards the common good with speed and with scale. So the efforts by the government in the form of policies, in form of initiative and collaboration in deepening financial inclusion is very inspiring. And I'm sure we'll hear more from Dr. Joshi later. And at MasterCard, we are committed to continuing to support and the Honorable Prime Minister's Digital India vision in helping drive a vibrant digital inclusion. So thank you very much again for having me here today. It's a real pleasure, and wishing the conference big success over the next 2 days. Thank you.
Thank you, Mr. Arora, for your presence here today and for sharing your perspective. We have in our midst today Mr. S. Raman, Chairman and Managing Director, Small Industries Development Bank of India. May I now invite him to kindly share his perspective. Please welcome with an applause.
the Secretary to the Government of India, Department of Financial Services, dignitaries on the dais, dignitaries off the dais, ladies and gentlemen, it's really good to be here. Vipin, it's great that we are once again here at the annual summit, and congratulations for the 20 years. SIDBI's, of course, been part and parcel of, I think, the growth journey of the microfinance industry, certainly, and a lot of other developmental activities. So I must thank profusely the speakers who have already spoken. I think, Vedi, if we could replace IDFC with SIDBI on your slides, I think I echoed exactly the same sentiments. It is truly, and as speakers have said, Ramesh, thank you so much for a very informative report. But we have all, as bankers, I think, moved completely into the digital era. And I think that is really where I would like to just present a few facts before all of you as to where we possibly could go. So we are really talking about, from the MSME perspective now, I'm really speaking from that perspective, it is two clear, distinct buckets. One is the GST-registered MSMEs, and one is the non-GST registered. So the numbers are roughly 2 crore in the first bucket and about, I would say, 7 crores in the second bucket. Because as you all know that the retail trade was brought into the definition of MSME a few years ago. Now, how do we deal and how do we solve for each of the problems? So on the first side, where we have GST, I think between GST, ITR, and bank statement, we have all, with the help of the fintechs, now brought this into a nice science. So we are talking about a highly programmatic system of weeding out at least the not so good cases, and maybe we'll make a few more mistakes in the good cases, but as was brought out, I think GNPA levels are at record lows. So if I were to look at SIDBI's portfolio of 2 years, so we started this about 2 years ago. So even if I were to take those initial loans, which have now crossed maybe 12 months to 18 months, we have already seen an improvement in our asset quality, just for the fact that we have gone into a data-driven credit appraisal process. So today at SIDBI, we do not have paper coming into our process, and it is an entirely digital journey from start to finish. My point is that between term loans and between working capital, for this segment of GST, I think we've probably solved it, and we now just need to know and need to figure out how we are going to push much greater quantum of credit. Let me say that it's a quantum of credit per day is what we need to be looking at. So if we were doing 3 loans in a branch per day, can we do 9 loans in a branch per day? I mean, that's really the way we should be looking at it. And where is this really going to sort of take us? So very roughly, we are now 330 lakh crores as a GDP. We are somewhere in the region of 25 lakh crores of borrowing by MSMEs. So what is the share of MSME in GDP? It's roughly about 30% today. So if we're saying that it's 100 lakh crores of GDP contribution by the MSME sector, it is with a base of something like 25 lakh crores of credit. Now, if one were to just take that ratio forward, maybe it'll become a little more intensive with a little more credit going in. So how do we add the next 100 lakh crores to the GDP and thereby bring the MSME share closer to the numbers that were also talked about just now? Can MSME come towards 50% contribution of GDP? Because that is really where China is. Maybe it's even more than that now. So that is really the challenge that we have. And when we break that challenge down, we're really talking about micro segment of MSME. There's already about 1 crore micro units which are registered in the Udyam platform with GST. can we take some part of that 1 crore units and make each one of them into 10 crore revenue per annum companies? And that is really when we will add 100 lakh crores. So you can do those computations in your mind, but I'm saying today we have the ability to focus on that micro segment and help them gallop towards 10 times of their revenue. And that is really where I think we'll have MSME contributing 45 to 50%. But very quickly, let me come to the other segment. It is the segment with a very long tail. We're talking about 7 crore entities. Even if we talk about the first 2 crores of those 7 crores, even by focusing on their requirement, I think we'll do a great service. And that's really where we've all worked together. Everyone in this room is completely aware of that particular segment. What SIDBI has done with the help of the Ministry of MSME is bring 1 crore informal entities into the Udyam registration platform in the last about 6 months. We have a pipeline. We're working very closely with the MFI segment, with the banks who are dealing with microloans and the MFI loans. We are therefore pushing another 1 crore entities into Udyam registration by the end of March. So roughly, if you look at the numbers under the Udyam registration platform, we're talking 2 crores with GST. We're talking another 2 crores without GST by the end of March. Now, this is really going to help all persons who are giving loans to the informal entities. And we're now talking 2 crore informal entities with Udyam registration. You're talking about the ability to churn that portfolio, do the origination, and pass it on to the banks, thereby freeing your balance sheet for that much more lending. Because the big benefit that the RBI has given is Udyam registration becomes the basis of your priority sector loan. And that is really what we are trying to push, and push very hard. So we need to solve for the problems of the informal entities, and thereby how do we do it? We again go back to as much data as possibly we can get hold of. The penetration of QR codes is something like 75% at the tier 4, 5, and village level. We are therefore talking about thicker bank accounts. We are talking about the account aggregator, which is now working extremely well for savings bank accounts. And as we know, a lot of these informal entities are really operating with saving banks accounts. So we talk about the bank providing the data, the bank account providing data, and the second bit, of course, is the credit score. It's quite amazing that 4.5 crore entities or informal entities have been serviced by the microfinance industry over the last few years, maybe 10 years. They have now got a record, and it is this record of a credit history that we're all depending upon. And now let me just take you to how that could get even more rich. We have 9 crore members in the SHG system. Even if we look at probably some overlap between SHG and MFI, but what is the possibility of us to work towards bringing the richness of data in the transactions within the SHGs and bring that also into the credit bureaus? This information today is actually not available because it is entirely manual on books, but there is a possibility, and good work has already started in that direction. So we could look at the possibility of enriching the data within the credit bureaus, where another maybe 4 or 5 crore entities have transaction history. And the movement that we have seen is the movement from SHG or JLG towards micro enterprises, towards individual loans. And it is this movement which really is, I think, the aspiration of this country. It is this movement which is giving us the indication that we want to start our business, we want to grow our business, and therefore, can you provide credit? And that's the sort of final point I just want to place before you is, can that credit come at much lower rates? Today, it's possibly, it's just my own personal view that can you possibly grow a business at 25 and 28% interest rates? My view is not. Can we lower those costs? And I think good progress is happening even on that front, where we're talking about co-lending between the banks and the NBFCs, where there is now a better blended rate that is possibly available to so many more small entities. And sorry, a final point is that in this entire journey of credit, I really feel that we need to probably focus that much more on the micro-insurance. It's something which has come to our sort of attention that much more, that when we do lend, we are worried about the fact that those informal entities, when it comes to a medical emergency, when it comes to some emergency in the house, they will end up using the money which is lying with them. And therefore, can we look at a comprehensive program where a loan also accompanies some kind of a micro-insurance, whether it's linked to Ayushman Bharat? There is today a wonderful movement that's happening towards Ayushman Bharat, more and more insurance companies covering themselves under that scheme. So this is something which I just wanted to leave on the table. Thank you.
Thank you, Mr. Raman, for that very inspiring and thought-provoking address. Ladies and gentlemen, we now move on to the next part of our program. Before hearing from our esteemed chief guest, we will have a short launch ceremony. On the occasion of completing 20 years of the summit initiative, Access has brought out a publication with articles from 50 experts who have been working in financial inclusion in India and have been associated with the summit. May I now invite Mr. Vipin Sharma, CEO Access, to provide an introduction to the 20-year commemorative publication.
Well, this part was a little afterthought within the inaugural thing. This is our 20th year of the summit, which was started in 2004. And for the Access team, it is a moment of, a thrill. And I was just looking at the 20 years, and within these 20 years, the sector has evolved dramatically. So we had some tame, some tepid, but also some tectonic shifts within the sector in the last 20 years. And having created a platform like the Inclusive Finance India Summit, I think it became a very good platform to track all that was happening, the whole evolution of the financial inclusion space across the last 20 years. And in our own way, we were able to see how this platform could inform, it could influence, it could support the policy environment in the country. And through the Inclusive Finance India reports that we bring out each year, we are also able to document how the sector has evolved over the last 20 years. So that's one part. The other, Access is a not-for-profit. It's a small organization which tries to do these complex summits. It's not easy, So every year we have to go out to look for financial resources. Every year we have to see if we have the right human resources to manage and, manage all these complexities. Every year we have about 125 to 130 tall leaders from the sector. We have to go out to them and make them agree to speak in the summit, managing those affairs. And then finally, we have to fill this hall, so we also need to reach out to see how, we will get the audience for the 2 days of the summit. So all these things are tough. They are tiresome. And I would say that the teams that we've had in Access in the last 20 years, very fortunate, have straddled these complexities with great aplomb, elan, and I would say also with equanimity. The third point I want to make is that, for a small team, for a small organization to have a big ambition for getting the whole sector together, it couldn't have been possible if we didn't have some key stakeholders very steadfast, supporting our work, on a long-term basis. Few names I remember. So SIDBI comes first. SIDBI been supporting the summit for 17 years, and Prakash might be able to let you know why it didn't support the summit for 3 years. Then we have NABARD, who supported the summit for 14 years. We have HSBC, which has supported the summit for 15 years, BMGF 10 years, MasterCard 10 years, IDFC 7 years now. And it's a great privilege to have such strong support, but there have been a whole lot of others who supported the summit on a year-on-year basis. A lot of other stakeholders come to contribute, to co-curate sessions in the summit. They do their own side events around the time when we organize the summit. With this kind of groundswell of support, it has really encouraged us to continue to do this. And I would say that maybe after the first time when we organized the summit in 2004, we would have said, oh, we did a great job, and we would have ended it. But it's only thanks to Mr. Brijmohan, who's somewhere here, who was the executive director at SIDBI. And he said, listen, Vipin, if you stop organizing these things annually, I am not going to talk to you. You better do this, because at that time, we were only focusing on the two strands which were committed to delivering small credit to the unreached, one was the SHG program, and the other was the emerging microfinance institutions, where we had a lot of complications at that time, and we wanted to, broadcast, why there is a need and a rationale for another dedicated channel to grow and flourish in the country. So thanks to him, we are in the 20th year. And just because it's a milestone year, we thought we should bring out something like a commemorative publication. And it looked like a quirky idea. I made a gentle request to a few to contribute to that. And we thought, it'll be yet one more coffee table book kind. But if you see the response that we got a response without really badgering or going after, the invitees to contribute to the book. We had 50 who responded, and they're not short. They are like 2,000 to 3,000 word thoughtful articles. So it's now, for me, not just a coffee table book, but it's a very fine publication which, in a very unique way, gives out diverse perspectives of, those authors who contributed. So we have the book. It's looking nice, and it's great reading and very thoughtful reading. And I won't take much time, but I'll just request the inaugural panel to please release the book, and let's give ourselves a clap.
I'll request Mr. Sharma to kindly present a copy to Dr. Vivek Joshi for the release. Thank you all for doing us the honors. Ladies and gentlemen, it gives me great pleasure to now invite our esteemed chief guest for the inaugural address. But before I do that, a brief introduction. Dr. Vivek Joshi joined the Indian Administrative Services in 1989. He is currently posted as Secretary to the Government of India, Department of Financial Services, Ministry of Finance since November 2022. He is also serving as a member on the boards of Reserve Bank of India and State Bank of India. From 2014 to 17, he was also Joint Secretary in the Ministry of Finance. Dr. Joshi has held crucial posts like Registrar General of India under MHA, worked in ministries of Women and Child Development, Textiles, and other departments in the government of Haryana. It is my pleasure to request you, sir, to kindly deliver the inaugural address. Please welcome with a rousing applause.
Dignitaries on the dais, distinguished guests, ladies and gentlemen, it is indeed a pleasure to be part of this Global Inclusive Finance Summit 2023. For the first time, DFS has collaborated with Access Development Services to organize this event. I understand this event has been organized in collaboration with the Niti Aayog, and this is the 20th year. We are very happy to get associated with Axis in organizing this event. And from our side, we can commit that we will, in future also, we will collaborate with you. But I must say for this, we should give credit to my colleague who is sitting there, Prashant, who has been very supportive and positive. Because of lack of my time, I delegated this responsibility to Prashant to make this thing happen. I'm really happy that we have been able to collaborate with you in this endeavor. Before coming to this place, I had no idea what kind of event actually this would be. And let me admit that this has been quite an eye-opener for me, that for financial inclusion, Access has been so sincerely organizing this kind of event from last 20 years. But one organization which ought to have been here, which, I mean, we will make sure that from next time they come, is NPCI. They are making a lot of contribution in this financial inclusion sector. I would have been happier to see them as one of the sponsors for this event. But that apart, let me just give a few important points which will give overall landscape of the financial inclusion. This has started with Honorable Prime Minister's Pradhan Mantri Jan Dhan Yojana as the national mission on financial inclusion in his independence address in 2014. And this was formally launched in August 2014. This mission, as we all of us know, that this provides access of banking facilities to the unbanked adults with at least one bank account and a free RuPay debit card with the inbuilt insurance coverage, access to credit, and affordable insurance and pension facilities. Today, I'm very happy to inform that this provides more than 51 crore unbanked persons with zero minimum balance Jan Dhan accounts. And thus, this has helped us to reach the unreached and in serving the unserved and the underserved segments of the society. I'm also happy to note that more than 55% of these accounts are owned by women. And therefore, this scheme has been very helpful in achieving equity as far as gender-based access to the banking facilities is concerned. Also, 67% of the accounts are opened in rural or semi-urban areas, thereby addressing the much needed, much talked about rural-urban divide as far as banking services are concerned. To enable further digital transactions, over 35 crore RuPay debit cards have been issued to the PMJDY account holders, free of cost. As per National Sample Survey today, more than 92% adults have a bank account. You will be happy to note that the pace of PMJDY has not slowed down even today. At present, we are currently adding at least 3 crore Jan Dhan account a year, and we are not far from a situation where all the adults in the country will be covered with at least one basic bank account. But let me here flag two important issues which all of us are grappling here. And since all of you are working in this area, I would like to mention here something about inoperative accounts. As in case of other banking accounts, the inoperative accounts in Jan Dhan is also around 17 to 18%. So there is a need, for all the bankers who are sitting here or all the financial inclusion agencies who are here to make these inoperative accounts as operative. The second point I would like to highlight is the nominations. Because the person might have opened an account when he was unmarried or he was single, and after that he gets married. So there is a need, to continuously update these nominations for not only for Jan Dhan accounts, but for any kind of accounts for that matter. So these are the things we should be also worried while we are increasing the coverage. Cyber security and cyber frauds is another area of concern for all these accounts, and as a matter of fact, for any of the accounts. These are the areas where, we have banks which are working, RBI is working, NABARD is working in these areas by tightening their systems. But the main, I would say, resistance to cyber security and cyber fraud will come with increased awareness. And the people who are sitting here, I think you are in best positions to make the customers aware about these three things: the inoperative accounts, get them KYC done, then about nominations and cyber fraud or cyber fraud issues. Of course, with in collaboration with the NPCI, we have also started doing some videos to create awareness, and every Friday, NPCI is releasing new videos which alert the customers with regard to cyber frauds, covering different aspects each week. I think they will continue this for 6 weeks. Three videos they have already released. There is a need to popularize these kind of materials among the people who are holding Jan Dhan accounts. Another important aspect of National Mission on Financial Inclusion was to increase the number of branches or number of banking points. I am happy to note that currently there are about 1.73 lakh bank branches in the country, 9 lakh BCs, 1.5 lakh post banks centers, Indian Postal Bank centers, and 2.08 lakh ATMs are already there. And these have been mapped in Jan Dhan Darshak app being maintained by the DFS. And this app is also used to identify the unbanked inhabited villages not having a banking touch point within a distance of 5 kilometers through the GIS mapping facility available on this map. The expanded banking network created under PMJDY is also being used to provide life and accident coverage, that is the Jan Suraksha of rupees 2 lakh at a very nominal annual premium of 436 and rupees 20 to the marginalized sections of the population under Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana, respectively. Similarly, under Atal Pension Yojana, people can enroll with predefined monthly contributions for getting a guaranteed minimum monthly pension between rupees 1,000 to 5,000 after attaining age of 60 years. Since the launch of these schemes, total enrollment under PMJJBY and PMSBY have grown to 18.51 crore and 41 crore respectively. And there are around 6 crore subscribers under Atal Pension Yojana. If you look at these numbers, while we have increased a lot in PMJDY, opening up the bank account, but still there is much ground to be covered under Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana. If you look at, it's very simple. In 20 rupees, if you are getting a cover of 2 lakh, why not everyone should take this? But if you consider the numbers, they are not matching up to the expectations of the schemes. So I would urge the people who are present here that financial inclusion, of course, means the opening of bank accounts, but also, giving the insurance and pension coverage to the customers. The implementation of this mission is regularly monitored by the ministry with the banks, public sector banks mostly, and we also invite private sector banks. I'm very happy to note the kind of work IDFC as a private bank is doing in this area, and the kind of loans he is providing is something which probably I think the big counterparts can also emulate. The JAM Trinity, which has been created by the government, it provides a pipeline through consent-based linking of bank accounts with Aadhaar and mobile numbers of the account holder, has enabled instant transfer of direct benefits under various government schemes to the eligible beneficiaries. During last financial year, 693 crore of DBT transaction with a value of 7.16 lakh crore have been made through the NPCI under various welfare schemes of the government. It has also enabled Aadhaar-based authorization of banking transactions, including cash withdrawals and remittances, the benefits of which were recognized during the pandemic period. The beneficiaries of the relief remitted by the government to the bank accounts of farmers, women, senior citizens, and Divyangs under the Pradhan Mantri Garib Kalyan package could withdraw the money during the period of lockdowns, mainly because of Aadhaar-enabled payment system operated through our BC's network. Access to credit, especially to small entrepreneurs under Mudra Yojana, is another important intervention under the financial inclusion initiatives of the government. Under PMMY, 44.42 crore loan accounts have been sanctioned with a total loan of about 26.08 lakh crore. This scheme is also instrumental in promoting gender-based equity in the society, as 69% of the loans under Mudra Yojana have been sanctioned to the women entrepreneurs. I would also like to mention here the two schemes. One is Pradhan Mantri Swanidhi scheme for street vendors in the urban areas. This is an excellent scheme in terms of making available easy credit to the street vendors. Around 78.5 lakh applications have been sanctioned under this scheme by various banks thus far. Pradhan Mantri Vishwakarma scheme, which has been recently launched by the Honorable Prime Minister, is another important milestone. In fact, in Pradhan Mantri Vishwakarma scheme, the idea of Honorable Prime Minister is to make this scheme as a model to be emulated in any further schemes, launch of any further schemes. So therefore, the emphasis of the government, so far Pradhan Mantri Vishwakarma scheme is concerned, more on the quality. This provides identification, first, a very rigorous identification process is there for 14 trade artisans, and then training them, providing them skills. Of course, they are already skilled, but kind of upgrading their skills with the latest tools and technologies, then providing them around 15,000, a toolkit costing around 15,000, the modern toolkit, and then they become eligible for any bank loan. So you look at this scheme. I mean, first you are identifying these skilled persons who doesn't have access to the loan, then you are upgrading their skills, and then you are bringing them to the fold of banking system. I would also like to mention here the recent initiative, which is currently being, is under implementation, the Viksit Bharat Sankalp Yatra. Honorable Pradhan Mantri has the dream of making this country as developed country by 2047. In order to make our citizens aware about the various good initiatives taken by the government in last 10 years, and to kind of give a sankalp to the citizens, this Viksit Bharat Sankalp Yatra had been launched very recently. This yatra will be there till 3rd week of January, if I remember correctly, till 25th of January. And this covers whole of India, and various schemes, including the 6 schemes of financial inclusion of DFS. There are, of course, other schemes of the government which are being showcased in this Viksit Bharat Sankalp Yatra, and Honorable Prime Minister is interacting personally with, of course, online with many of the beneficiaries in this scheme. So I think the people who are working with your customers in field, in the village, in rural areas, or even in urban areas, I would encourage them to participate in these yatra, which is being organized with the help of state governments. With a view to give impetus, here we saw one example of IDFC. They are using heavily, they are leveraging technology to enhance the penetration of insurance and credit. I think these days, many of the banks also, almost everyone is using technology to increase the penetration of insurance, credit, and investment solutions for the financial inclusion customers group. Linking technology-based data analytics with traditional banking and insurance activities is facilitating risk assessment and credit delivery through digital mode, in which fintechs are playing an important role. SIDBI is doing a great job by being an innovative partner in all these kind of initiatives. Even the two schemes, Swanidhi and Vishwakarma scheme, SIDBI is again playing a very important role by designing the interface of the customer and both front end and back end with the use of technology. Adoption of technology, of course, results in greater convenience for the customers and cost-effective delivery of financial products for the financial institutions. Let me mention here that while public sector banks have done a wonderful job in furthering financial inclusion efforts and have done a lot of outreach for popularization of financial inclusion schemes, the participation of mainstream private sector banks, maybe IDFC is an exception, is I think, lacking, and there is a lot to catch up by the private sector banks with their public sector counterparts in this aspect, except probably in one scheme, that is Mudra, where private sector banks have also contributed a lot. So therefore, the people who are present here from these private sector banks, I would request them to increase their participation under PMJDY and Jan Suraksha schemes in order to help in realizing the ambitious goals fixed by the government for itself. In the sessions which are planned today in this summit, the emphasis, I think, will be on all these aspects such as financial inclusion, inclusive finance, extending finance to MSME, role of small finance banks, climate adaptation and resilience, inclusive lending for women empowerment, etc. Eminent speakers from different parts of the world will be presenting their views during these 2 days. I hope that the summit will go a long way in promoting inclusive finance in the country. In the end, I would like to wish great success to this Inclusive India Summit and extend my best wishes to all the participants and to the organizers of this event. Thank you. Jai Hind.
Thank you, sir, for those very inspiring words and your insightful address. We once again thank all our esteemed speakers who have joined us here for the inaugural, for joining us on this occasion and setting the tone and direction for the 2 days of the summit. May I now request Mr. Vipin Sharma to kindly present a memento to the esteemed chief guest as a token of our appreciation and gratitude. Mr. Vipin Sharma, I'll request you to felicitate Dr. Vivek Joshi on behalf of all the organizers, sponsors, and partners of the summit. We also have small mementos for the speakers as a token of our appreciation for their time and input, and I'll request the team to hand them over as they leave the stage. Once again, a big thanks to all the guests at the inaugural panel for opening the summit here today. And thank you all, ladies and gentlemen, for joining us for the inaugural. We are behind time, but we will take a quick break for tea. This is a quick 10-minute break only. And before we break, here are some important announcements. Please pay attention. Please do make sure that you have collected your M badges, and coupons for copy of the Inclusive Finance India report can also be redeemed at the access desk right outside the hall. Please don't forget to collect the M badges if you haven't collected them already. And tea is being served in the hard court and the garden area outside. We would also like to share with you all that this year we have introduced a web app to access